There it is. Quick sound check. Thank you. All right. So here's where they are. Let's just keep it straightforward. They may come back to test the area that they yesterday broke out from to try and rally. Okay. This is it. They either hold it, which gives them another opportunity to rally again, or they don't. And this is the place. It's where you put on risk. 422.65, 422.50, 45. This little pivot low is going to be my line in the sand, 421.64. And that really just opens the doors for the lows and the unfinished business and then the 418.30, all that stuff. We don't know what's going to happen. I'm just saying that's the other side of the failure to rally. And then this was just another little bounce in the downtrend. And even if they do rally, it's still a bounce in the downtrend. But that's where we are. If they get above, really, they should go finish this. If they try and rally and they close the gap, or they get above yesterday's close, where are they now? Yeah, they're pretty close anyway. Spiders are only 22 cents away. So if they get above yesterday's close and they can stay there, it should open the door for the 425.80. The prize yesterday was not finished. And that's not to say they have to stop there, but they can. And that's the other side. I'll be right back. 1 second. Sorry about that. I needed to update the notes. I didn't put the other side of that in the notes this morning, so I forgot. So there it is. So it's the above yesterday's close. This comes into play. And if they start pushing above here, then that's the next place. I'm not so keen on shorting this, but if they ran up here quickly, I might. All right. I'm keen on buying this down here, 422.65, give or take, but they're going the other way. We'll see. Could be just early morning, run toward the gap and then drop them. We don't know. We'll find out in a second, or about 40 seconds. Got a bunch of stocks on the move, by the way. They're over here. All right, so we'll be on those too. What'd you buy in at? Oh, okay. Well, look what they're coming into here. This could be support.
ExxonMobil opened just above the first level, actually. And Rivian opened above the first level and hit the first level.
All right, I'll switch over there in a second. Armand, you might, if they pop it a little bit, you might be able to exit if you want to exit at the gap, which wouldn't be the worst thing in the world. But this is support because of this pivot here. All right, so spiders are at the flat line, no big deal. What was this? So we got ExxonMobil, didn't get there, huh?
Yeah, Exxon came up just short and bounced away.
What was the other one?
Rivian, it hit the first level, opened just above it, dropped down to about 21.
Oh, there you go. I had it wasn't updated on my chart. Thank you.
Yep.
Spiders aren't doing anything. Just reset these. Nothing to see there. There goes Rivian. Anybody take Rivian? That was good. There go the spiders.
Aluminum actually turned positive. Schlumberger is positive for the day now.
Dirk got Rivian. Nice job, Dirk. Okay. Something for everybody. Be right back. All right, they're just floating around. They filled the gap. Can they get above the gap or are they going to fall? We don't know, so we can't guess. WPM.
Clorox is heading back down. Not there yet, though.
Let's see. Got to hold this pivot or it brings a whole nother leg lower into the picture. It's a weekly chart I'm looking at, and that's an important number. So I would base it on tomorrow's close. They stay above, they got a fair chance to bounce, but you can't buy it there. That's just not.
Just punched through the first level, and Rivian's about to hit the second level, which is $28.64.
Okay. Yeah, Corey, there's no signal that it's finding any kind of bottom here. Not yet. I can take another closer look at it later. What's going on in IWM world? Semis are up a little bit. Yeah, everything's not that really. It's not far from the flat line any way you look at it. And that was a good close yesterday.
Rivian just touched the second level.
Rivian, I don't know if anybody's playing Rivian anymore. I mean, Once it bounced at the first level, it gave you something. What did it give you? 39. So it gave it to you. You'll likely get a reaction at 425.80 to 426.10 or 15 if they get there soon, real soon. I'm not an interested short player, but some of you may be. It's an opportunity. It's a number. If they time off the clock for another 15, 20, 25 minutes, then no dice. And if they can't close above the gap, other than just to spike it, that's a whole different story. Not ready yet, or they're going to fall. And we just wait. You got to have patience. You got to wait for the market to do something that gives you an opportunity. And then we got a couple of new folks in here today. Don't guess. We're not guessers. You just got to wait. It's the hardest thing to do is have patience every day for a reason, because it's that important. Just give them time. You're 7 minutes into a long day. Do the what? Do the spike up tails rounding lower mean anything? No. 7 minutes into the day, no. And it wouldn't mean anything anyway. Not to me. Let's go check on Rivian. Okay. More Fed speakers today, Matt? All right. I don't know what they need to be talking about. All right, just let them go. See if they'll fall a little bit. Never know. Fall. See if they'll come down. They don't have to come down, but if they do, it's an opportunity down there. Thanks, Shannon. Okay, Matthew, those are my numbers today. I mean, there's other numbers. There's always other numbers.
For anybody watching, Rivian just touched the last level at $20.08.
All right, we got it. They may have to just go touch 20, spike 20. It's another area. Let's see what's going on. So we got a little movement. Let's see what the Qs are doing. Let's see what else we got. I'm not suggesting to buy this, but 423.5 could be some support. Don't buy it. It's not a buy. It's just could be some support. And it was. I suspected that. 71. I had a little lower. You really want them to get stretched out a little bit. The quicker, the better. I'm here. I'm watching. Just let them do their thing for a while. The IWM. Team transports are down 1/3%. Spiders are down 1/4%. Russell's down about 1/4%. NASDAQ composites down 1/4%. It's about 1/4% type of day right now. It won't stay that way.
Clorox just hit its first level, but it's bounced a few times before it.
A little bit. Just like any other day, if the spiders get a bounce, these things have a better chance. If the spiders are going lower, it's a drag on everything for a while, most of the time, most of the stuff, in the heat of the moment. And remember, what's happening now isn't necessarily going to happen in 5 minutes from now. We're programmed to think it will just by human nature, but that's not the case. I did see that, Mark. Yeah, I saw it. Thanks, Sean. It does. Thank you. 54. Just wasn't good enough to buy it. It's a support in this general area, but it's not good enough. Clorox coming down, Rivian bouncing at 20. 20 was obvious. You just have to give you the number that I have. I can't manipulate the thing because then I'm guessing. I never can do that. 92. That was kind of typical, right? Spike 20. I mean, they do the same shit every time. You just have to know that stuff. You have to be around long enough, listen long enough, watch it long enough to know that stuff to say, all right, look, I know the number's 2008, but I'm going to try and wait, or at least I'm not going to be surprised if they go to 20, 1995 with shipping and handling, anything like that. 423.13 overnight low. I would look for my number, Bob. You may get a bounce there, but it's not my number. And think about what I said earlier about what that number is, what that area is. If they're headed down there, just logically for me, why would I want to buy in front of that? If more often than not, if they get close, they're going to come visit that area for the reasons that we know. And that's the reason I wouldn't buy anything other than that at this point. And if they don't give me what I want, then I didn't miss anything. Remember how we have to look at it. If you want to buy that, that's totally up to you, as long as you're willing to understand that if they come down to my number, you're not going to be surprised.
Clorox just hit the second level, 122.57.
A little sell on Clorox. It is, Bob. Patience is a virtue. It's very hard. It's very hard to get out of your mind that I'm missing the trade. You're not missing the trade. You're not, because it never got to your number. There's a totally different way to look at it. Transports are doing okay, a little better than before. IWM's bouncing a little bit. Qs are down. Really would be better if they brother and sister got there at the same time to their respective numbers, but that's not happening. Little divergences going on out here. Most everything trades together most of the time in terms of the indexes, but not necessarily all day, every day, not at the same magnitude, but generally speaking. So when we see this, one of them is going to be right, one's going to be wrong, meaning the spiders are going to come down and the Qs will probably go lower, or the Qs are going to bounce at that place and the spiders are going to bounce at the same time. One of those two things is true. We don't know which one yet. Okay, so Qs get there, spiders coming down. Now we'll see who's in charge, figuratively speaking, right? Oh, there it is. That's really the only other number I have in between if the Qs come down. Clorox tried to get a bounce here. It's going to need a little help from a friend over here. I'll get you one if you want it, Mark. Just give me a second. Let's see. Well, I got one. You're not going to like it. If Rivian, the other numbers aren't on this screen, but if Rivian doesn't bounce, this is the next number. And then below that, it's all the way down here. And this is the next number because this is the last line of defense. 1955. Did you hear anything I just said, Mark? Was I on mute? You got it? Or I was on mute. I'm not sure which one. Okay. Thank you. All right. This is last line of defense. 55, 54. I'll show you what it is. It's right here. 48. But I came up with 55. All right. Spiders are trying to bounce. Q's held. The charts look different, but they're trading together for the most part right now. 424, 45, give or take a little bit, is going to be overhead resistance. If they can get above, they can begin trying again to go to the highs and then, or the flat line, and then after that, try and rally again, if that was it. They got to get above 425, 424, 45. XLF. Ah, good call. Yeah, let's see it. Yep. That can't be a negative, right? How could that possibly be a negative? It's impossible. Doesn't mean that everything has to go up, but this can't be a negative. So it's on the table as something to watch. IWM is moving. Again, can't be a negative. Doesn't have to be a positive, but it can't be a negative. What'd you do with that, Armand? At the gap we talked about before, or before that? Doesn't really matter. No, it's not a pivot, John. It's just a number. It's just, they got to get above here to get going. Otherwise, they're going to get stymied. That's all that is. Though I don't really have a pivot right now. The pivot is 422.65. That's the pivot. I take that back. Yeah, Qs are coming down. I'm not sure. Let me see what you're looking at there. From here to here? Is that what you're talking about? Yeah, that's normal stuff. So I said 65. They came down to whatever. Same thing. Same thing. I think you wait. You wait for the number. See if they'll do it. You got to wait. It is, Jeff. But there's a whole lot of conversation around that, because if it's wrong and they get below here, 421.64, it opens the door for the lows and the unfinished business down here at 420.15. Then they spike 420, and then all of a sudden we're talking about this again. So that's the risk, but you have to understand this is the place, but that's the risk. Okay. Okay, Michael H., you can hold it for as long as you want. 422.65 has to be a target, meaning has to be an exit in front of that. Yeah, I knew that. Again, we're not 100% sure they're going to get there, but we know, here's what we do know. A lot of times they love to come back and retest the former breakout or breakdown area. This is a breakout area. They're on their way back to retest the breakout area. Whether or not they get all the way there is up to the market, but that's the spot. I'm not doing this. I just want to show you something for the point of showing you. You could take a pivot down here and do this, right? And if this works, we would say that that worked, but that's not a true trend line because that's not a pivot low. So that could fool you. You will see that published places. Look at this, it worked. And then you do that again somewhere without having the actual pivot low and it won't work. And you're scratching your head saying, how come it didn't work? Because you didn't really have a true trend line. So word to the wise, because it's not a pivot low. Pivot low is down here and the trend line goes like this. That's why. Look, this is the pivot low down here. You can't do that. That's not right. There really isn't an equivalent, Armand, because it's not the same looking chart. If they look the same, I would have something better. I gave you this number because I knew it would be at least short-term support, but that's not the same. And there's really, no, I don't have the same type of situation. They'll bounce together most likely, but I don't have the like place. Could they get to 50? Of course they can get to 50, 422.50. This is the number today, but it's anywhere in here. See, they broke out from here, they're coming right back. If it's a failure, it's a failure, but this is the spot. No, I don't, Matthew. I never look at a 1-minute chart. It'll give you a false sense of what's actually happening in the market. And the larger time frames are always the dominant thing. So a 1-minute chart doesn't have any data in it. So all it is an EKG chart whipping around. Can't do anything with that. I can't do anything with that, put it that way. Nice job, Michael H. Right in front of it, right? And look at how they bounce right in front of it. That's the give or take every time. You never know. I say it every day because you never know. Low of 67. That's the give or take, right? So anybody that took the long down there, they could come back down, but this was the spot. Be right back. The scalp so far, for the most part, right? What's the high? 09. It's close enough. Q's still coming down, so careful. They could still come down and spike it and all that stuff. They do it all the time. Chad got it. Well done, Chad. Yeah, it's definitely first time, best time. Now, if they come back down, you have to make them spike it. Get down to 422.50, 40, 38. They may or may not, but that's just kind of the progression of events. Good job, Bob. Jeff got it. James got it. This is how we program ourselves to take the base hits, and then if they come back down, you're fine. Worst case is you have a base hit in your pocket, and then you can always re-engage lower, or something else will come up. Yeah, so did I, Justin, by the way. I missed it. I was waiting, and I just didn't pull the trigger. I was waiting for the spike. See, you never know. Why, Doug? Why what? I'm not sure. Oh, right. I didn't miss it. You're right, Chad. You're right. I forgot. Touche. Chad says you didn't miss it, and he's right. I didn't miss it. I don't feel like I missed it. I mean, I just said it that way, but you're 100% right. What were you asking, Doug? Why? I'm not sure what the here, because they came a couple of pennies away. I want them to spike it now. It's just that simple. It doesn't mean they will, doesn't mean anything. It just means that's the way I do it. Always make them go a little bit lower, because that's the spike the low thing now. Then let them spike the recent low. That's really the thought process there, Doug. Does that make sense? And once you're in and you're holding a trailer, you don't have to let it go until they come back to your purchase price, maybe a tick or two, either direction, whatever your fancy is. But in that area, you just don't want to let the remaining portion go bad on you. And then you guarantee a base hit. It's a risk-free, emotionless trade. And you pile up the base hits and they put you in the Hall of Fame, and you never know which ones give you the whopper. You just never know. That's why we say it every day, because we never know. What's going on over here? Stuff's going lower. By the way, now that we have a base hit in our pocket, you should, if you were long. What else happened today that you'll realize it applied to a lot of you after I say it? And I'm not going to make you guess because it'll be too hard. You have to know what I'm thinking. Yeah, the transports are getting weaker. You're right. Thanks for bringing that up, Michael H. What I was saying was, and I'll get to some of these comments in a second. What I was saying was that I kept, not I, like, the strategy that we use every day, okay? And it's no different than any other day. We talk about patience, we wait. I almost beg you to wait. And I kept a lot of traders out of trouble by using what we do every single day, because some of you would have done whatever you would have done, and half of you, if not 2/3, would have lost. And no matter what it was. And you just wait for the thing that makes the most sense. To me, 422.65 made the most sense for all the reasons we discussed. And if they come back down, fine, but they've given everybody an opportunity to pocket money. And that's the name of the game. Matthew sold 2 contracts, no trailer. That's fine. Nice job. That's up to you, right? Doesn't matter. You don't want to hold the trailer for this one. That's totally fine. It's totally up to you. Matt took it there. Yeah, they always wreak havoc. You know that. They never make it easy. They're not going to just, sometimes they do. Infrequently, they'll just take off, right? Like yesterday with or what was it? Tuesday with the Whopper, the short. Sometimes they just do it, right? We got the 10 o'clock data release and they just fell out of bed and we were short and that was perfect. Sometimes they'll just take off like that. Other times they're going to wreak havoc. And that's why we do the base hit thing. And you try to stay in, and you try again, then you try again, then you try again, and it won't work most of the time. But the ones that do work, you'll be thankful that you kept it. A lot of them will be stopped out. That's just the way it works. A lot. I don't know the number. Like I can't tell you X percent will be stopped out. We never know. But you'll get stopped out, but you'll still have a base hit in your pocket. I talk about this till I'm blue in the face. Yeah, they're basically flat, but that's relative strength. IWM. Yep, you're right, Mark. Let's take a look at the DJT. Not good. Not good for the bull case just yet. They could bounce, but it's not, there's no relative strength there or anything. See how nothing means anything directly, but it's all information that we take in and we put it together as the puzzle. And here you have a series of higher lows. Short-term basis, higher lows, that's a positive for now. It doesn't have to work, but it's a positive for now. You take the market at face value. If you're holding the trailer, you just hold it. It doesn't cost you anything to hold it. I don't know the percentage, Bob, but it's even less than that. It's actually what happens most of the time, like more than 50% of the time, I think, is they'll go up or down in the morning, they'll rally or pull back, and then make another attempt later in the afternoon or in the afternoon at some point. And that's like the majority of the schematics. Then you'll have a trend day every now and again, or you'll have a flat day where it just chops around in a range. You'll have all that stuff. But when you get a rally in the morning or a decline in the morning, the odds on you're going to find a morning high or a morning low. You're going to do a retracement, and then they're either going to continue or they're going to go back the other way. And that's most of the time. XLF, yeah, it's flat. It's up 6 cents, but it's good. It's good for the bull case. There you go. Look at this. See? Now it's getting into Whopper Jr. camp, maybe. A single, maybe no cheese yet. But you get up to 10 points, and it's not easy to get 10 points in a trade, okay? But I'm like standing on my head begging you to stay in this thing because of this. Because of this. Yesterday and today. Yesterday they break above it, and today they come back to test it. I don't know how many times I've shown you that in a variety of different ways over the years. Market symmetry at 427.50 at close. I'm not sure what that means, Brian. At close. 8 points for Michael W. Well done. No trade overnight, Michael W. 6 points for Grant. Yeah, I don't blame. But aren't you in Europe? If I'm not mistaken? You just didn't want to wake up early. Or no, went to sleep early. It could be a wedge and they could go up. You just don't know. But so far you got the higher low situation. So that's something. Give me a minute or so, I'll be back. Walk away for a minute and look what happens. Oh, we'll see. This is the wreaking havoc part. Now you don't want it. Now you don't want you certainly don't want the 422.65. Too much risk. First time, best time for sure. They can spike the low and rip it back up, but it's not a reasonable risk at this point in my book. Not after the trade. Don't have to have another one right away. Just let them do their thing for a minute. Yeah, it's reasonable, Mark. It's 422.60. No, John, that's not the way it works. We never short in the hole, right? Shorting when the market is at its lows is a recipe for failure. Doesn't mean it won't go lower. It means it's not a good trade opportunity. You short from resistance or at resistance. You don't short at lows. And that's why we will typically, and maybe not every day, but there are plenty of days and sometimes more than once, we'll buy a spike of the low, which is the opposite of what you're just asking for that exact reason. So I would write that one down. Yeah, that's a whole nother ball game, Matthew. Like if they started getting below 422.65 and they started closing below, it doesn't mean they're going to 420, but that's other than the lows. Let's look at it another way. Okay, if they're down here, all right, we know we have some unfinished business. There's no reason whatsoever I can find to buy the market before that. And so that's one answer. And if they're all the way down there after failing, that means this was just a bounce in, just a bounce in a downtrend. And we have to realize that this is an objective. Don't forget where they were the other night. So that's what would be in my mind if they came down here. Okay. Doesn't mean I'm right. I don't have the patent on being right, but that's what would be in my mind. This is the wreaking havoc part. The easy part was over. And by the way, you still are in the trade. Okay. You're still in the trade. Now, if any of you sold it, that's up to you, but I'm saying nothing changed. This is the wreaking havoc part. They do it every time. Qs, bear flag on the Qs, 5-minute chart. Okay. Not so much, right? 5-minute charts don't really tell you much. That wasn't a bear flag, right? They came into resistance and they bounced. That's all that was. This is the wreaking havoc part, and this is why it's very hard to stay in the trade unless you have a process. And the process was around the entry point. Be right back. I'm just going to update the notes real quick. They got to get above 424, maybe 424.15. And then they're going to have to contend with 424.45. That's just the progression of events. If there's a bull case. Yeah, I don't use a 5-day moving average, Matthew. The ES is down about 19 points in the meet. I'm not sure what you're looking at there. ESZ 23, and that's weird. I see what you're saying, but that's not the case. Is that what you're saying? Is that what you're looking at? That is a little weird. I'm not sure about that, but I'm telling you, it's down. ES is down 1875 as I speak. I don't know what the story is there.
Mine shows down 1875.
I mean, it's the same chart. I'm not sure why that's off. That's weird. Yeah, they're the same. The moves are the same. That data is wrong. That's all. Let's see. Hourly chart. Trend line from 929 from up here, right? So that is the pivot. So you're drawing a trend line like this. That's the trend line. So they're above that trend line. I don't know what you're doing this. You can't do that. Is that what you're doing, Matthew? Yeah, you can't do that. You have to take it from the first pivot. That creates the trend line. So you see this green candle? That hit the trend line and got rejected. And now that same trend line is still here. They got above it and they're staying above it for now. You're welcome. Now it's slowed down. The morning rush is over and it's all about 422.65 in my opinion, give or take. They're either going to stay above this area or they're not. By the way, let me go back to that trend line because I want to explain something that if you did, now, if you drew it yourself, that's fine. But if you saw it somewhere else, then I want to show you what happened. All right. I'm on YouTube and I'm showing you something and I don't really know what I'm talking about. And I show you this. Okay. Now, I've drawn that because maybe it fits the current condition of the market where it is. But this just happened today. This trend line was somewhere that was down here. But the point is that you can always draw something on a chart to make it look like something you want it to look like. It doesn't mean it's right. And that's just something to be aware of that's out there when you look at other stuff. So you have to just consider what's right and what's not, and you may not know, and that's the challenge. You're welcome. Oh, there you go. See, it's not a buy anymore. They're failing. It could be a fake out, but they came up short, they bounced. They gave you the trade. Now it's over. Now you got to wait for something else. If it's a fake out and a spike to low and they pop back up, so be it, but that's not a high probability situation like the first time was, first time, best time. Now there's no high probability in here. That's the difference. No high probability in here because of where they are. This is where they are. They're at the lows. Here, let's look at a different chart. They're at lows. This is a very, very heavy downtrend. You don't play games with this. You got to be precise. Not necessarily, Michael H. It doesn't have to happen that way. Could. Is at the current time. I mean, they're taking it back. How eager do you believe the Federal Reserve is about saving the bond market? Jorge, it's a good question. I don't know if eager is the word, but here's what I would say. The Fed's in a pickle. All right? It's like a rundown. And they keep going back and forth because on one hand, they have to bring inflation down and they're raising interest rates, which at the same time crushes the bond market, which is what happened in March with the regional banks. They crushed them. And so they saved them because they crushed them. And so how long is that going to go on is the question. And I don't know the answer. It can't save everything. And there's probably going to be more as long as rates keep going higher and capital levels change at banks and they have to fill holes and gaps in their balance sheet. That's the problem. So they don't want the banks to fail, but they're not going to stop doing what they're doing because a couple of banks might fail. And maybe that's the best answer I can give you. Yeah. Transports are down about 0.6%. Q's coming towards this gap. Whether this is going to be support or not is a question mark. Below here opens the door to the gap. A lot of times they'll bounce here first. But when the gap is so close, it's not really a reasonable opportunity. But when the gap's far away, you're more likely to get a bounce. They are, absolutely, Jorge. Jorge says, it sounds like they're doing a lot of theatrics over there at the Fed, and they are. I'm sure that you have, the Fed has regional central banks, right? So they're responsible for the banks in their region and watching the market come down. All right, hold on a second. I just got to update the notes. Go, watch them come down. If they bounce, they bounce. This is the last line of defense. Talked about it this morning. And you can see they're already starting a little bit of a bull bear battle down there. And if they give this up, I got nothing. I got nothing. First time, best time. Yeah. Not all first time, best times are made the same, but this one, based on all the other stuff on the charts and all at the lows and all this stuff and the failure was a big part of it. This is not, they're not all the same. Not all of the spike the low and rip it back up in the other direction encompasses a failure. And this one encompassed a failure that could turn into a big failure. And that's the reason why there was no spike the low and rip it back up in the other direction trade. Just to let you know what I was thinking. Could have been wrong, but I'm willing to be wrong to do what I'm comfortable doing, certainly comfortable telling you. Shannon, you know what? Powell said when he started this process, there's going to be some pain. I think he used that word. And everybody hears it and they think it's right away. But these things take time to run through the economy. When you raise interest rates, it doesn't impact everybody right away, and it doesn't impact everybody, period. But who it's going to impact is over time. A company may have to refinance debt in 2024 in January. I'm making it up, 2024, maybe right now. And so they weren't really impacted up until they were forced to take action. And here you go. The cost of refinancing is much higher, and that goes right to the bottom line, or it comes right off the bottom line. And these things take time, so the pain is not immediate. It rolls. It's like snowballs. It's called an interest rate cycle for a reason. Right. He wasn't fighting inflation back then. How much credence do you put into those daily expected highs and lows? Expected by who? I'm not sure. I don't have any expected highs and lows. That was from Matthew P. Oh, that stuff doesn't work. We talk about that stuff all the time. Max Pain and all that stuff. We look at it because I have to prove the point. So we write it down and then we see where the market is on Friday or Wednesday or whatever the thing is. And it works like 10% of the time. Or I don't know what the percentage is, but it doesn't work. It doesn't work enough to even look at it, put it that way. We've all proven that in here many times. None of that stuff works. Just stick with what I'm talking about. I mean, I'm teaching you how this works. And what I would love for you to do is put some blinders on for a while and just forget all that other stuff. And just try and understand a different way to look at things and see if it works for you. You're paying for it. Try and use it. That's the best thing I could tell you. I mean, today is pretty good evidence, isn't it? Kept you out of trouble until they got to the number. We got a bounce, you got a profit. They came back down. You got a base hit or more, maybe a double, maybe a stand-up double, whatever. And here we are, flat. I don't know if everybody's flat. I don't know who's doing what, but this is what it should be. Flat, and we're waiting. And we have patience. And then if the next thing rolls around, we'll take action. That's fine, Matthew. You can ask all the questions you want. I'm going to give you my answers. You don't have to love them all. You don't have to listen to them all, but I'm giving you my way of looking at things, and I'm here to teach those that want to learn as much as I can, as much as I know. It's not always going to be right, but I'm here to teach as much as I know. I'm giving you everything I got, almost. A couple of secrets. Thanks, David. David T. Yeah, I'm not afraid to say it. David says, you're on the money most of the time. I'm not afraid to say it. I'm going to be right most of the time. I'm going to be wrong, and we're going to take a hit and all that stuff, and it happens. But how much does it happen? I'll let you guys answer that. How much does it happen? When you followed instructions, how many times am I going to be wrong? 1 or 2 out of 10, if that. Maybe sometimes even less. Sometimes we'll go on a streak where nobody's taken a loss in 3 weeks. It's happened plenty of times. And anytime I've ever, Michael H says, I lose when I don't listen. Anytime I've ever taken a guess, anytime is tongue in cheek. Most of the time when I take a guess and I don't follow my own instructions, which really doesn't happen anymore, but it used to happen like everybody else, I lose. So you stop doing it. Eventually you kind of say, all right, I'm sticking to the process because the process works, and I'm going to stop treating it like a slot machine, like I'm walking by on my way to the room and I can't help but blow $100 at a slot machine. And don't treat it like that. It's not what it is. No more than 1 in 5. Jeff, it's not even close to 1 in 5. Yeah, it is. I'm sorry. That's 2 out of 10. What am I talking about? Sorry, Jeff. But it's still, it's actually, it depends on how you look at it, because we have something for everybody. So there's traders here that are going to take certain trades that others aren't. So it's very hard to say. But if you just go by the layout of what I write between 9 and 9:30 before the market opens and waiting for that juicy morning trade, that's kind of the one that I'm talking about. Most of the time it's right. I told you I have a relationship with the S&P. Hold on. I got to walk away for a minute or so. I'll be right back. So now, what do we say? We say, if they're not going to recapture this area up here, then they're going to come down. They won't make it easy. They'll try and rally a little bit, but if they're not going to be able to close up here, then the door is open for the lows or lower. And that's just, I can't see it another way until they get back above here. Good question. Looks like that. Looks like the spider chart. I'm going to look at some other charts here. I'm just going to run through some stuff on my other platform. Last line of defense. This low, this number. Okay. It's the same thing. It's the same area. And I just got this from a different way, a different place, a different approach, and it came out the same. And it's the same area, and it's the last line of defense before the lows, in my opinion. It doesn't mean they get to the lows, but there's nothing in between from where I sit. Last line of defense right here. And if they get back above 422.65, that's good for the bull case. If they can't, no dice. That's it. Nothing really new. Just watching. Be back in a moment. Matt, no problem. Just give me a second. Let me show you something else here. I was just looking at a bunch of different charts, right? You can't look at this and say, oh, look, they're making a bottom, or oh, look, they're going to bounce. You just can't. This is just nothing other than a little bounce in a downtrend. When you think about it, it's a lot less than this one right here. So you have to start thinking, maybe they want to get to 418.30 before this is all said and done on this particular decline. It's possible. We'll see. We'll see. Okay, Matthew, I got you. You know what? I've said so many times, I guess you have to hear me say it. And I may not have said it in a while since you've been listening or whatever, but I really do try and stay away from those shorter time frames because there's not enough data in each candle to look at a chart and say, look, here's a 2-hour chart. Each one of these candles is 2 hours of activity. When the market can push up like this for 2 hours, it's a whole lot different than 5 minutes. 5 minutes can get knocked right back down if the chart looks like this. See? So if you look at a longer term chart and say, all right, look at this down leg here. So that's bearish. And you come to a 5 minute and you say, oh, look, they're bouncing. So let me buy it. But that may or may not be anything to buy. So you have to just always take your cue from the longer time frame, from the large, and you don't have to be 2 hours, but longer than this. You look at them all. I look at them all. And I just try and get a sense for what the market's doing. And when you see smaller time frames start to confirm what you're seeing in larger time frames, that's when you're onto something. VIX. I have a number in the VIX. I think I gave it to you. This was already hit. I think I gave it to you last week. No, I didn't put it on here. It's 2175. I think it's actually 2174, but that's close enough. That's the number. That's the next number I had after that 1914 or whatever it was. 2175. That's my number. Now, yesterday looked like that was happening, and this could be a reversal, but they didn't get to the number. But that's what the daily chart could look like. This could be a retrace of yesterday's candle. Look at this. I didn't notice that. Yeah, so they're leaking lower. Last line of defense, I'm telling you. There's nothing in here other than the lows for me. Yes, Mark, absolutely. But if it's a good question. Let me read it out loud. If all charts act and react the same way, and I'm talking about the larger time frames, don't the same things apply in the smaller time frames as well? Okay, that's basically what Mark's asking. I ad-libbed a little in there. And the answer is yes, but now you're bringing in a level of variable risk, because if something's going to fail on a shorter time frame from working out, why is that likely to happen? Because the larger time frame is dominant. And if an hourly chart, let's say an hourly chart has, let's look at an hourly chart and let's find what I'm talking about. Okay, hourly chart is a bearish pattern. All right, now it failed. Okay, not in this case, but in other cases, if this was a 5-minute chart and I looked at the hourly and said, why did the 5-minute chart fail this bearish pattern? Maybe the hourly chart was actually bullish at the time. And that's the reason. So on a short-term basis, it does work. But if you're not cognizant, if you're not aware of what the longer time frame or larger time frame looks like, then you're running into variable risk that you may not even be aware of. And that's, hopefully, Mark, that makes some sense. No, Chad, and you're right for asking the question, because that's the reason they missed it already. And Chad's asking about the 200 period moving average, right? So now they're just hovering over it 3 days in a row, bearish pattern now. Okay, it's like a flag pattern. It's not really a complete one. It's in the making. It's only 3 days, but hovering over the 200, what that's telling you is it's probably not the destination. One way or another, it's not the same support that it would have been on the 3rd. Put it that way. Plus, I think you were asking about this, Chad. They came down here. It wasn't really that close, but it was getting in the neighborhood. They bounced away. Now they missed it again. This is not support. No way. Because of those reasons. So you're right to ask that, Chad. You have to be aware of the largest time frames, Mark. You're right. That's it. There's no end all be all. I'm giving you the things that have worked for me over a long period of time by watching the charts and figuring it out. It's what I've uncovered or discovered that works enough to where it's a business. I gave you 1865 the other day, didn't I? Or maybe I didn't. I don't remember. What was the number I gave you? Do you remember, Bob? I give you a different one number? I don't have it on this chart. 1826? Ah, I'll have to go back to my other charts. I'm sure it's on there. 1826. I know why. Let me see the rest of your question. 1826.20. How about that? Still doesn't look like any bullish situation to me. Not just yet. They're due for a low. It's coming. Rivian's all the way down. Well, I had it on here. Yeah, that one was just melting. But they only stopped here for what? Did they even stop there? They creeped into it, stopped there for 15 or 20 minutes. Back tested it, and here's the next place. It's a shit show. Here's a bounce. Again, it's just a bounce. It's really just a bounce until they start getting, the whole thing's just a bounce, but it's just until they start getting above the pivot. No dice. Shannon says, I know people mention trend days. We know that we don't know if it will or will not be. Is that a harm's way? Okay. Yeah, there's no reason to believe you're going to get a trend day until you do. They don't happen that often. I'll tell you right now, you get back above 422.65 and you're not going to have a trend day down. It'll have just been a shakeout. But you don't know that while it's happening. And you have to use the numbers to say, hey, no chance I can do anything below this or above this or whatever it is. It's just progression of events. If this is the morning low, so be it. They didn't retest the lows. They made another higher low. Then that becomes a bullish situation for another bounce. Just take the market at face value. What's it doing now? What is it telling us? That's what it's telling us. Stay above 421.85. You have a chance for 422.65. but you don't know that they're going to get there. You just have a chance, and the longer they're above 421.85, the more chance you have to get to the pivot. You get above the pivot, they'll rally again. The IYT is the transports. That's the ETF for the transports, Michael H. But they're not really the same charts. I've shown that recently a couple of times. They don't really look the same, which is why I use the transports in the videos at night, because the IWM is never in the same position. It's just not. So I would rather use the actual thing, not a derivative of the thing. And I've said it for, well, I've said it for 20 some odd years, but since I've been making the videos since whatever year that was, I've said that my two favorite market leading indicators, the IWM and the transports are my favorite canary in the coal mine. That's never changed. It's not going to change anytime soon. But I don't use it as much intraday. I do to look at it, but I'm talking about day to day, bigger picture, what's happening, where's the money flow going, where's it coming from, or is it going out, is it coming in? Because everything is just one thing. It's money in or money out. That's it. Same thing with the Fed. Money in or money out. Money in the system, money out of the system. Right now, in order to raise interest rates, they take money out of the system. That's what they're doing. Stock goes up, money in. Stock goes down, money out. It's cash flow. It's money flow. It's interchangeable with price action. It's all the same thing. You hear these fancy terms and people make a big deal out of all these terms and they want to make themselves feel smart. It's money in, money out. Everything is a derivative of that. Do I ever see a consistent move at certain times of the day, top of hour, 5 minutes, 1 minute? No, I never looked for it. No. I mean, there are certain times of the day when I expect certain things to happen. We could talk about that a little bit, but not down to the minute. For example, you can break the market down like this, and this is coming from Matthew P, and I'm happy to answer all this stuff. So the morning rush, as I like to call it, that's going to be around an hour, sometimes less, sometimes more. And that's where there's the most participation in the market for that day, minus maybe the closing period of time, which is a whole nother ball game in and of itself. So where's an opportunity? When the most participation is present in the market is where the opportunity is, because that's the most you have the participation. When you have lighter volume, so after the morning rush, like right now, the volume's dropping off and it will continue to drop off for the next few hours. It doesn't have to go down every hour, but it's just going to be light. And what happens is you're adding a level of variable risk. Why? The market likes to bounce up in light volume a lot of times, but it can also move rapidly in either direction with any kind of flood of volume on the buy or the sell side. So all of a sudden you look away and 5 minutes later you look back and you say, what happened? I was in a position and all of a sudden now I'm down. And all of a sudden you have this big down candle for 5 minutes. Where'd that come from? All of a sudden a flood of volume comes in for whatever the reason. We don't need to know the reason. It doesn't matter. We can't know the reason and we don't need to know. But if a flood of volume comes in on either the buy or the sell side, it's going to move the tape a little bit larger than when there's more participation. So adding a level of variable risk. So that's why this is a morning business. That's why we wrap it up at 11:30. Because I know what happens. Not that there aren't trades to be had between 11:30 and 4 o'clock, and not 4 o'clock, but earlier than that, because you need time to execute, right? But it's not that there aren't possible trades. It's that 80% of the time, the market's going to go to sleep for a few hours. It's going to go in a chop shop formation. And frankly, I'm not sitting here all day watching that. It's a morning business. This is the way I run it. I know where the opportunity is, and I know where the trouble spots are. And you'll get in more trouble in the afternoon than the morning if you do, even if you do the same process. It's not the same market. And so I've also asked traders in the past, and I get usually confirmation of what I'm thinking when I ask this, which is do yourself a self-analysis where what's your performance, personal performance in your trading account, trading with me in the morning, and what's your personal performance trading in the afternoon by yourself. And even if I was here in the afternoon, I'm here to tell you that my performance would not be the same. And I know that. I know that for a fact. And so I'm saving you the trouble. And what I also tell people all the time, and we say it in here, I haven't said it in a little while, a few days, but this is like a store. It's like Walmart. It's like Target. It's like any other store. You have an objective. You have a list of things you need to get. 1 item, 10 items, doesn't matter. You go to the store, you get what you need, you pay, you get out. You go to the next stop or you go home. The market's like a store. It's open all day. It's open from 9:30 to 4. Okay, it doesn't mean you have to shop there all day. In fact, the more you shop there, the more money you're going to spend, the more stuff you're going to buy you don't need, because that's what would happen if you stayed in the store all day. That's my story. All right, I'm backed up here now after that dissertation on some questions. Shami wants to look at the Q 5-minute chart. It's having a bearish pattern. It is. It is. And until they get back up here, that is a bearish pattern. They'll start to break the chain if they can get above 356, but that doesn't mean this is a big breakdown candle. So what are they going to go halfway up or all the way up? We don't know. You're right. It is a bearish pattern. So let's look at another chart. 10-minute bearish pattern. 15-minute in the making, right? It's only a couple, 3 candles, but it's in the making. We don't know if that's a bottom or not. Look, they left the gap alone and they spiked the low here. That was the beginning of the white space in between the former low and the gap. No man's land, I like to call it. So they came halfway in between. They do that a lot. And then they bounced. But could you buy it here? I'm not saying you wanted to. I'm just using this as an example. You can't buy it here in front of the gap. No way. Why would you do that? You wouldn't. Unless I'm giving you a number saying this is the number. That's different. But just generally speaking, you wouldn't do that. So they're come up short of the gap. So what am I going to say next? If they do this sideways routine for another hour or 2 hours, whatever it is, and just go chop around here, then they're building energy to go right through this gap and go lower. Then they'll go spike 354. Okay, Shami? Got more than you bargained for with that little comment about the 5-minute chart. You're welcome. I'll use any opportunity to run my mouth. Yeah, Michael H, I couldn't agree more. I got to that point where I just said enough is enough. I am packing it in and I'm not trading in the afternoon. This is even long before I was doing this. I haven't traded in the afternoon in years. Now, I'll qualify that. Are there times when I'm sitting here watching anyway and I'm just vegging out and I'm just using it to relax? I'm watching, I got the TV on, I'm watching something else, I'm watching golf or I'm watching whatever, I'm not watching the CNBC garbage. And it happened to be in my office with the screens on and I'm watching and all of a sudden they're gonna do something that I say, and that happens. Of course it happens. But I'm not looking for it. It's gotta hit me in the face. I did not, Shannon. I can go back and look. Let me see. Last thing I see from you is the one about the trend days. I don't know. You want to put that in again? I don't know. I can't find it. Sorry. Oh, here it is. I see it. Or maybe you just put it in again. Oh, here it is. All right. So I'm going to read this one out loud, obviously. I took 31 trades in September, 26 for 29 on my trades, meaning your trades, meaning David's trades. 0 for 2 on mine, both in the afternoon. Shannon, that is unbelievable. Shannon, do me a favor. I can't cut and paste that. I need that. Can you send me that in an email? Just cut and paste it right into an email, shoot it over to me. I'm going to use that tonight or in tomorrow's on the docket. One of the two, I'm going to use that. I won't use your name. Thank you. I may use your first name if I may, but that's it. Thank you. So Lee says, I did the analysis on days when I was already up in the morning. I gave back 30% of profits and added 40% of commission costs in the afternoon, right? I'm not surprised, Lee. I know the results. That's why I talk about it. Thank you. Yeah, on average. All right, of course. And then you're going to show up in the afternoon and you're going to have a whopper trade. And then you're going to show up what? The next day in the afternoon. I know how that works. Yeah, XLU is going to bottoms because of, well, let's take a look at, not bad for a rookie. We can get this out of here now. If that's a top, at least for a while, they're going to come down to 4.6, 4.55 on a normal garden variety pullback for starters. Okay, so that'll bode well for the XLU. And you can see this bottom here. Okay, interesting how that happened the day before, right? You ever notice that? Look, this is yesterday, and the XLU bottomed the day before. Funny how that works, isn't it? Interesting. So if I saw this on Tuesday, then I would have felt even more confident that that was going to be, at least had a chance. This would have been like a tell. If I was looking at that high in interest rates over here, I mean, I knew the number anyway, but they just missed it by a couple of basis points. But that's another piece of evidence, we'll call it evidence. Pretty good stuff. There's never a loss for information in the market. All right, Armand, what I said was, this is unfinished business. They have to get above 170, what is it? 170, pardon me, 147.27 in order to get anything going in a bounce scenario, a bull case. And if they got below here, you got the lows, and if they spike the low, that's my number. That's all I have. There's really no trade here now. There's no long, there's no short. They're just hanging around. There's no setup, if you will. What was the other one? NVIDIA. Wedge pattern. It's the first thing I saw right when the chart came up. Yeah, I see this. Move down, that wedge, flag, wedge, whatever you want to call it. Now, it doesn't mean they can't continue doing this, but they're going to have to clear the highs from yesterday. It's a market trade, I think, at this point, Armand. For the most part, you're going to get a sell-off in the market, NVIDIA will come down. You're going to get a bounce in the market, NVIDIA will bounce. They have to get above this high, and if they get below this low, you have a gap right here that was not filled, but they came close. You can't buy that. Where's, like, if they killed it? 118. No, it's even lower. Maybe 117. A spike of 117. That's a long way off. 117. That's too far. There's got to be something else. Oh, that's a daily chart. I'm thinking I'm looking at an hourly chart. Sorry, Armand. Sorry about that. Oh, here's a good spot. 136. They have to clear these highs, and you'd like to take a ride up there, but there's nothing telling you other than they're eating time off the clock here. But if they get below, just use this breakup candle low for argument's sake, just for learning purposes, which is 438.88. Use that low as your bogey. Get below that low, 436 is on the table, and they should bounce it there. 436, 435.5. They should bounce it in there. But it's a wedge, and if they don't, look out below. But from a short-term intraday perspective, there should be a trade in there if they came straight in there. Best I can do in NVIDIA too. NEE, still not bouncing. There's something wrong with this one, more so than just the interest rates. That's what the chart is telling you. Here's that bounce the other day, and look at this. So it's, I'll get you a number if you want. Hold on. I'll show you why. Because there's nothing left. There's nothing before this low. The low is 43.70, and there's nothing in here before that. I don't have anything. I shouldn't say there's nothing. I don't have anything in between here and the low. What else we got? I'm going to wrap it soon, folks. Because he's the transportation secretary, Matt. Come on. Transports, transportation department, secretary of transportation. Oh, okay. Nah, that's why. Yeah, it all factors in, Matthew. So it's a good question. 422.65 is 8 cents from the 382 fib retracement from today's low to 421, today's low to today's high. No, I didn't factor that because the pivot was, no. So sometimes I do, but this morning, I mean, if that's what you're saying, I didn't do the math or I didn't do it, but that was created after I gave you the pivot, right? So I would say my pivot's important, and then you have an added thing after the fact that was just created, right? You're looking at this. Is that what you're looking at? Yeah, it's close enough. It's not that far away. So they spike 422.65 and they hit the 382 retracement, and somewhere in there they're likely to find some resistance, right? That's normal garden variety stuff. So you say, all right, wait a minute. He's got a pivot that we know is important. We saw it before. We took a trade there before. Okay, so we know that's an important place. They got to get back above it. We know why. Now, all of a sudden, the market created the math behind the 382 retrace from today's low, yesterday's high to today's low. Okay, that's a 382. So yeah, if you're looking to like take a reactionary scalp off that, that's the only thing you could do with it. But yeah, I mean, I wouldn't do it, but yeah, you could. You didn't get any of the SMH analysis? Sorry. I didn't have anything. That was the analysis. Up here is the bull case, and the bear case is below 141.95, which opens the door for the lows, and then 138. And there's no trade in here. There's no long, there's no short, because they're just going sideways in the middle of essentially a range. And the range, you could say, is between here and the next important number down, which is 141.95. So if they're in the middle, I don't know which way they're going to go. So if they go one way or another, there may be an opportunity, but until they do, no dice. That was the analysis on SMH. Yeah, nobody can stand that twerp. That's why I say it. All right. Last call for alcohol. I'm going to wrap it up for the morning. Remember, you stayed out of trouble if you followed directions. You stayed out of trouble early. You waited for the trade. You got the trade. You didn't let the remaining portion go bad on you. And then you just sat around because they weren't doing anything you wanted that was high probability. And that's pretty much was the right move so far. This is a business. You got to make money. Can't guess. Guessing and making money don't mix in the same bucket. All right. So that was kind of the schematic for today. Sometimes saving a bad trade is even better than having a trade at all. That was a positive one. Yeah, there was a lot of learning today. I agree. A lot of stuff we talked about today. Nah, it's been like that for a long time, Chet. They had relative strength for months and months and months, and it was just pulling the market up, meaning the Qs we're talking about, daily, weekly relative strength. And maybe it means something, but it's nothing we can do directly with that information. Not now. Yeah, we'll see you all in the video tonight, and we'll be back tomorrow in uniform, ready to go. You missed NVIDIA? Okay, Armand. Last one. So 436 is a play, it's far away. And they don't get bullish like the SMH until they break above here. Now, can you trade it up to here? I wouldn't, because there's no high probability that they're going to get there. If they break above, you got something cooking, you don't buy the breakout, you wait for a retrace. But if they come down here, that's an opportunity. And if they get below here, there's a gap down here and there's all kinds of stuff, but they're not doing that now. This is the first place of intraday support where I would consider a trade if they came down here interested in the next couple, 3 hours. But if they creep up, it's not a long trade because they're in the middle of a range, and it's the same as the SMH. Top of the range, and I'm going to call this the bottom of the range because it's support from where I sit. So you're in between, and there's nothing to do with that. Nothing I could do with that, Armand. That's the best I could tell you. I wish I had something better on SMH and NVIDIA. I just don't. All right, last one, Julie. You snuck in there. That was my next number if they weren't going to bounce it before. So TLT will get a bounce as rates come down. And here, it's very similar to what we just said. They're in the middle of a range. They have to break this chain. They got to get above this high here to get up to this gap. They have to recover. There's a lot of gaps. There's a lot of stretch down here. They'll bounce, but very hard to be long right now. In other words, it's hard to initiate a position right here. I would do it down here. I wish I had more. They just didn't get to the next number yet. This is old. Certainly don't need that. If the market goes up, TLT goes with it. We treat each chart independent of one another. However, Julie, I would tend to say in the short run, you're probably correct in that one because of the whole interest rate conversation that we had for the last couple of days. And if interest rates have topped out, and if they pull back, the market was going down when interest rates are rallying up. So is that going to actually, is that what is a short-term current correlation, if you will? I don't like correlations, but we have to call it what it is. Is that going to reverse and TLT would actually is the opposite of interest rates. So would that, yes. All those things seem like a probability type of situation. I would agree with that. And now, folks, with that, I'm going to wrap it. Don't do stupid stuff in the afternoon. I got to rest my voice. I talked my head off today. And we'll see you in the video tomorrow. Appreciate you all being here. I think some of you may not realize how good today was to keep out of trouble for a lot of you. You may or may not realize it. I realize it. Today, think of today as a win, even though we had a positive trade, but it was even more of a win than that. So a lot of learning. Got one in the morning, base hitter, double, and we'll go about our business. Okay? Appreciate everybody being here. Enjoy the rest of the day. See you in the video, and I'll be back tomorrow in uniform, ready to go. No stupid stuff. Thanks, everybody.